Ajay Srivastava joins us. Let's connect with him. Ajay, good morning. Thank you for joining us. NBCC, would you agree with my interpretation?
Well, Nikunj, I look at market differently. I look at things differently in the sense that we are working in an environment of negative interest rate globally, which means liquidity flows will keep coming to India. So fundamentals don't matter. The sentiments matter. Today is one booster shot. If this doesn't work, something else will happen. NPS will be regularized. At the end of the day, one of the reasons why we are bouncing around with the stock market is that we're expecting government to give more and more. And I think that's where it is. NBCC is, again, as I said, it's a PSU, trading stock, construction activity. You're right, nothing much will happen there. And by the time this money flows through will be another 1 year or so. But it's all about liquidity. It's all just liquidity saying that, listen, we need to buy stocks. We just need a reason to buy it. That's all. Give us a reason, we'll buy it. We'll analyze later.
So, Ajay, what should one do in this market? Because benchmark indices are sitting at an all-time high, but nobody is feeling excited or gratified by investing in stock markets because mid-caps are down on an average 25 to 30% from their highs. Most of the NAVs of mutual fund portfolios have underperformed the Nifty. So you do have this paradoxical situation where markets at an all-time high and no one is celebrating or feeling happy about it.
Yeah, first of all, Nikunj, what's happened is that we've all gone into a recovery stage. This market did not give any spectacular returns to anybody because we survived a huge fall and then have come back. So in a sense, the portfolios at best are at par or somewhere around that. So when you really celebrate is when you have really serious amount of returns. So returns have been muted because we have all traveled a very fair distance in terms of going down and traveling up. That's one. Number two is nobody in the heart of heart, as I said, is convinced that this market reflects the fundamentals of India at this point of time. You're right, 5% growth rate and a market at a high, historic lows of growth, historic highs of market don't sound good together. But that's why I said there are two caveats to that. One is global liquidity. This is the kind of stuff you will see when so much money is carrying negative interest rate in the global market. They will keep pouring in money. We'll worry about it when the things happen at the end of the cycle, what happens. But right now, there is liquidity available to pour into it. Number one. Number two is we find a government on the defensive. And when you get a government on the defensive, they're giving out SOPs to the larger sector first. The corporate tax cut was straight to the heart of benefited. In fact, if you look at the results, the major benefit is the tax cut. All the operational results are by and large par, poor, average. It's a tax cut. So we have a situation where the biggest chunk of benefits from the government largest is going to the top 200 companies or top 300 companies only. And number two is tax rate reduction has now brought the gap between a MSME and a large cap to zero. There's no tax arbitrage to being a small one in this country, which used to be at, when the tax rate was brought down to 25% for a company up to 400 crores. So in that scenario, when all the SOPs are going to large caps are getting the liquidity from global market, which has got tons and tons of liquidity. You really don't need to look at fundamental because you're not convinced about the fundamental. You just need to look at liquidity and that more and more stocks will come to the top end. Even if you look at the real estate stuff, SBI Caps manning it. Now, SBI Caps has no domain expertise to manage real estate. I wish it was HDFC managing it. I would have given a lot more credence. And where will the money go? It will circulate to the larger of the industrial projects, larger of the builders who will corner most of this money. The real ones, struggling ones are not going to end. So there is some logic in large ones like Adani, Piramal, etc., getting a fill up in the stock market because some of their funding could get substituted by this fund coming in, and to that extent there will be a relief for them on their portfolio. So it's good for the larger ones again, and that's why the dichotomy will continue on the mid cap, small cap, large cap. In fact, we are very clear that India is for large caps. There is no point of bottom fishing. It's a dead end street for the mid cap for a longer run.
And where does that put you in place when it comes to autos, Ajay? Has been beleaguered for a while, no signs of a recovery, even if you go by earnings, maybe an odd Bajaj auto here and there. But the fact that R.C. Bhargav this morning in his interview to Economic Times has said that Suzuki India's future is not looking all that bright for the next 5 to 6 months. The company is going to continue to struggle, and he does not see a recovery coming in anytime soon. Having said that, the stock prices have recovered across the board. Even Maruti now at 7,300 thereabouts. Would you say just purely on the prices, the best or rather the worst may be already in the price and it's time to buy these dips? Or would you say there are better sectors available? Why autos?
Well, okay. To extent, I'm biased because we're running short position at the highs. Also, we brought into short, so we're running short position on mono auto stocks. So we are pretty biased on that extent. I think market is, in our view, ahead of itself on automobiles. And the two reasons is not only the economic growth, I think what's happening there. I think the competitive scenario is also changing for Maruti and for all others. It's going to be a really competitive market. It's becoming like telecom. In my view, in the next 12 to 18 months, you will see industry, auto industry really behave like telecom, where there'll be a race to the bottom in terms of margin and the pricing, because so many new players have come in, so much capacity is idle. Every accountant will do his calculation and says marginal cost is so much, let's go do a new scheme. So I think it's more than fundamental. It's going to be the competitive scenario in the industry, which is now going to play out in the next 12 to 18 months. And Maruti is saying that. I think it's saying the fact that new players have come and taken a large share of this segment of the market. That's one. Number two, there is a brand fatigue with the old brands, which we all do it. We want to go to the new brand, check it out, etc. And I think Maruti is feeling the pinch of it. But I would guess that this industry is going to be the telecom industry or the aviation industry in the next 18 months. It's going to be really bad news on the margin side.
Okay. Ajay, last we spoke to you, you said, look, I like the market, but I'm not fully invested. What have you done after that?
No, nothing at all. To be good, as I said, so the two new sectors we had picked up last time, about 2 months back, was pharma and metal, which have done okay, nothing extraordinary, but they've been safe and sound and so on. But as I said, we remain invested in the large caps, unconvinced about the economic fundamentals, very convinced about the liquidity flows at this point of time, and we still hold about almost 20-25% in cash. And the reason we do that, Nikunj, is because the lesson of this recovery is that the real money we made was when we were buying at the bottom and we didn't buy enough. Buying at the top is not exactly, looks to me, a bright idea, irrespective of what is happening to the market. So this is the time, stay put, calm down, keep your money intact, you will get the bottoms and we'll make the money. Because 3 years have been bad for returns, we need to catch up with life. Life is running short.
Is that a very philosophical comment, or what are you trying to indicate here?
I'm trying to indicate what my wife tells me I bring home. You've not brought enough money home.
Where does power of compounding fit in here?
Sorry?
The whole concept of power of compounding, be patient, think long term, don't worry what's going to happen.
Yeah, it's right, but then what will be the role of investment managers, etc. if I go home and sleep? I need to find new reasons to be active every morning, and that's why I said we are inventing new things for ourselves, and this is one time I will not invent a reason to buy in this market. I think I will stay calm and quiet and put my 20% cash on the side and wait it out. Doesn't matter if you lose some money here or there, but I think we have reasonably invested. We don't need to go more than this at this point of time. And we'll see when the market turns around by March, April, what comes around to us. But for the current year, I think our investment portfolio is fully up to the extent we want to invest.
Ajay, paper, sugar, healthcare, even in the mid caps, you're looking at healthcare names as well as a couple of these other themes, which we haven't seen play out for so long. So it's interesting that, you're starting to look there. Just talk to us about, what's looking promising, which ones you're focusing on.
See, we have got started building position in the large caps of pharma. The three of the largest of, I think four. Yeah, four largest of the pharma companies, nothing to go below that circuit. So I think it's just 3 or 4 companies that we believe are undervalued significantly compared to the cash flows. You see enormous interest on the private equity side on the pharma. You don't see enough on the the side in the liquidity in the stock market. But these have tremendous value, and if you're getting good quality pharma names in India, which is so under penetrated in terms of pharma products, you are really looking at a substantial increase over time, and I think gradually US FDA issues will resolve itself, or US will become smaller portion. And the reason why we changed the stance is that I think government has also going slow on price controls. There is some pressure on the MNC pharma companies, which have done exceedingly well, if you've seen. I think so, keeping that in perspective, I think if price controls remain on the sidelines for some time, these companies could double really in the next year or two. And that's a fundamental play at 2 to 2.5 times book value for such large established names, having such a large domestic market. I think it's a criminal waste of money not to be there. And therefore, we believe that they should double up in a year and a half. Price control comes in, all bets are off. But I think price controls will not come under pressure of US.
Would you be drawn into this PSU euphoria, Ajay? Because that is where I think the real honeypot is. If BPCL is sold, if SCI is divested, if government brings their ownership below 50% in Container Corporation, some would say that some of these stocks could be on fire then.
I agree absolutely. We had a large holding in PSU. We still have a large holding in PSU. It's been a year now since we invested in PSU. And the reason we went in was not because of divestment, but because of the dividend yield which we were yielding, and they have been pretty substantial. So even if no action happened, it's a very good dividend playing stock, like Embassy REITs has done, phenomenal return plus dividend plays. I think Integrate Trust will do the same thing. But I think PSUs is a play on the government at this point of time. Dividend yields are extremely good, so you are safe on that side. But having said that, performance of PSUs has been disappointing. If you look at Bell, it's supposed to have been star at this point of time. Disastrous performance, Bail, disastrous performance. So if they delay this process of divestment, I think we'll see substantial erosion of further value. But at this point of time, you're evenly poised to get good dividend yield and an expected return. Pretty good, and it's pretty cheap even today. It's pretty cheap stock. So the play is relative to the market, very cheap, higher dividend yield, government will pull in dividend. And if these tax ops continue, there is no way but not these will be sold. And when they get sold, doubling is the least of what you can expect from any of these stocks, in my view. Leave aside a few dogs, but buy MTNL, BSNL kind of stuff. But otherwise, you can see doubling of the stocks in most of the cases.
Saying any, why don't you name the few ones which you like?
See, okay, you already named the OMCs have been with us for a long time. We have got the power transmission company, we've got there. Container Corp, no, I don't think we have Container Corp. I think we exited that, so Container Corp is off the table. I think we have metal companies, we have Nalco in our portfolio at this point of time. Phenomenal, pretty good dividend yield at this price. We had NMDC, which continues in our portfolio. So we have metal, we have OMCs, we have power companies. I think the three set of companies we are carrying in our books. We don't have defense companies, Bell, etc. We didn't have because we didn't believe that they will do perform, and they've, rightfully so, they have not performed well. But I think this three gamut is where we are, and I think the first to go perhaps will be the resource companies, because they're not doing well. They need the money to expand and diversify. Cycle is adverse for them, but easiest to sell, no complication at all. So resource companies, my guess will give the best return among all this sector.
Ajay, thank you for joining us this morning, and good chatting with you as always.
Thank you for having me.